Hi everyone, Jasper Basson here. Thank you very much for watching. If you haven't subscribed to this YouTube channel yet, please remember to subscribe now. Today I'm going to talk about the frequently asked question that I get in my practice, and that is, when do I need to register my business? And when I decide to register my business, in what entity do I need to register that? So firstly, we need to discover, when do I need to register my business? And that's a real simple answer. The moment you start trading, whether it's part-time or full-time, you need to start registering your business and declare that income in your next income tax return with SARS. Now when you start trading, you can choose between a variety of different entities to trade in, and 4 of them are a sole proprietorship, a partnership, a company, and a potential trust. So I'll run you through a number of pros and cons for each. I'm not going to delve right deep into that today, but I'm just going to give you a few pros and cons for each. And the first is a sole proprietorship. So a sole proprietorship is something that you really just trade in your personal capacity. So it would be Jasper Basson trading as Dryk Holdings, and your registration number is your ID number, and everything, all the risks, everything is exposed for your business and your personal capacity. Everything is exposed, and it might be a good solution for some, and it's a nice simple form of trading, and there are various tax reasons that you might need to trade as a sole proprietor, but from a risk perspective it's really not viable. A partnership is exactly the same as a sole proprietorship, for the exception that now it's not only one individual, but there might be 2 or more individuals that form together as a partnership. Still, the registration numbers, the ID numbers, there might be a contract, partnership agreement between the various parties, but it's still, everything is trading in their personal capacities. Same risk, assets, everything is in your personal capacity. The risk is even more because now you've got a few partners, or at least one or a few more partners in that partnership, and whenever they have financial issues, it will come to the business and it will influence you directly. So in my opinion, a very old school way of trading, and definitely not something I would advise. The third option, and the option that most people look into, is to start trading in a company. The company consists of a directorship, so it's a director on the top, and also the shareholding might be somebody else. It might be the same as the director or something else, another structure or another person. The great thing about the company is that it's totally separate from the directors. So the only risk towards the director or directors would be if they sign suretyship, any loan accounts that might be in the company, and if the shares in the company belongs to the director in his individual or personal capacity, it might still be a risk in his personal name. But it's still separate, and you can clearly distinguish between the 2 parties. The company's got its own registration number, its own various tax numbers with SARS, and it's been seen as an entity on its own. And the fourth option is a trust. And a trust is not, in my opinion, a great vehicle to trade in, but it's a great vehicle to hold the shares of the company that I've just mentioned before. So it's really just holding the value of that company. If you are not sure in what entities you need to trade, please send me an inbox, and I will gladly assist you with the opinion of what I believe you need to trade. If you want to be on our weekly broadcast list on WhatsApp, please send your cell phone number to 082-872-6404, and our team will send you a weekly update and content on accounting, tax, daily habits, and everything entrepreneurship in South Africa. So send that number to us, and we will gladly put you on the broadcast list, and look forward to meet you there.